Welcome to Bullshift, the podcast that helps people think about how the financial services industry shifts your attention to make you feel more bullish. My name is John DeGuy. I'm the host of the podcast and the author of the book, Bullshift. My guest this week is Tyler Meredith. Tyler is a founding partner of Meredith Bosencool, and I hope I'm pronouncing it correctly, Meredith Bosencool Policy Advisors, which is a public policy think tank and advisory consulting firm for public policy and the way people think about how we write laws and how we write budgets and all of those sorts of good things. Tyler's got a wealth of information, and he is a former senior policy advisor to the Prime Minister and the two most recent ministers of finance, and as a result he has a great deal of background in writing budgets, and we're going to be spending some time talking about Tuesday's budget. Tyler, welcome.
Thanks for having me, John. I've been a longtime follower of your work and really happy to be able to have this conversation.
I'd like to begin by talking about something that I saw on X about a month ago from David Coletto of Abacus, and he says that in order to make public policy really work, three preconditions need to be met. The first is that the public needs to recognize that a problem exists. The second is that they have to believe that there is a viable solution to that problem. And the third is that the public needs to be willing to act to cause change. What's your take on Coletto's three steps, and maybe tell me how that applies to crafting a budget in general?
So he's right in the sense that you need to have a problem that people understand. It's very difficult in the context of a budget when you think about a budget as the primary policy engine now of a lot of what happens in government. And that's true not just of the federal government, it's true we see in provincial governments as well, where the budget process in some ways has become, some would say, like a throne speech. It tells you everything that the government is going to do in the course, or intends to do in the course of a year. And it's the centralization of the policy process to do those things. So in terms of articulating the government's policy agenda, he's right that they have to start from a premise where there's an open mind to wanting to address a problem. Governments can always educate people on problems that they may not fully understand and they want or need to act on. But if the public isn't there or even has some notional awareness of the problem, it often will be a much harder lift of how you have to address it and the steps you have to go through to convince people that you've got the right solution to the problem and it's worth doing than if people are already there. And what's interesting about this particular budget that we just saw is that so much of that budget is focused on affordability concerns, particularly as it relates to housing, but not just housing. And that's important because what it represents as a budget, I think, is a pivot shift in the government saying, rather than us trying to talk about how we're going to deal with a whole raft of different problems, we're going to go to where voters are. We're going to go to where people already are in their minds about the concerns that they want solved. And we're going to show them in the space of a lot of different things that we're doing that we understand that problem and we're focused on it. You don't have to know about whether all of these policy solutions are the right thing in and of themselves to do. But if you look at them in totality and in volume, you think, okay, the government clearly gets housing. It clearly wants to build more housing. That's a problem that I'm concerned about as a voter. And I see that they care about it. And that in and of itself is enough of what you need to do in a budget in terms of you identify a problem, you try to bring solutions to bear on that problem. But I will say one last thing, which is sometimes in a budget, you don't know until the very end what the central theme of it is that you want to be, partly because things are always changing. Events are always changing around us. Great example was in the 2022 budget process as we were devising that. We went through both the Emergencies Act issues and the Ukraine war, and suddenly in that process had to devise a whole bunch of stuff that when we started the process, we weren't necessarily thinking of doing. And so, budget is not just about the government being proactive in putting on the agenda the things that it wants to talk to. It's also sometimes about responding to things that happen.
So let's go from the specific, what you just talked about with the budget on Tuesday, to something maybe a little more general, the mandate of this government as it started out. In 2015, the government took an approach of what, let's call it sunny ways, a very optimistic viewpoint of the world as it is and how the lens through which we see things. One of the things I talk about with Bullshift is that optimism is good, but that optimism bias, being so good that you're blinkered and not even thinking about blind spots, is dangerous. So I wonder if you can perhaps offer some thoughts about maybe how the mood of the country has evolved over the past 8+ years, from perhaps being optimistic to being maybe a little more jaded. What happened along the way, and is it better to be realistic or is it better to be optimistic?
So I'll start by saying that one of the rules, if there are rules about politics generally, is that you get the job that you show up for, right? So the prime minister at the time, one of the reasons that he ran on sunny ways, and one of the reasons why it informed a lot of how the government looked at things, maybe in some ways some might say eventually leading to virtue signaling, but with a very optimistic disposition, was because people at the time wanted that in their leader. They wanted to see a prime minister or a leader of the country that would be less divisive, that would try to bring more people together, because there was a sense that we had been through a period of time in which those divisions or frustrations were really starting to play out. Maybe today we might look back on that period of time from 2010 to 2015 and say, I wish we could go back to that, because that feels like maybe a less divisive time. But the reason that today perhaps feels different, and I think it's true if you look at any research around people's kind of anger levels, their incidence of mental health issues, their degree to which they feel kind of on the same page of social solidarity with friends and family and the broader public about wanting to solve big collective problems versus individual problems, is because I think we went through a trauma during COVID, right? A lot of us were forced to lock ourselves in our houses for reasons that I think we all agreed were appropriate, but it required a certain sacrifice. And we came out of that experience frustrated as people that we had been deprived of our ability to socialize and our ability to work in some cases for a period of time, all for good reasons. But we distanced ourselves literally, physically from each other for a long period of time. And so we've lost that kind of socialization as people. And that has led us to be a lot angrier at a time in which the macroeconomic backdrop has also changed and made people angry because of the sense that, okay, that sacrifice of working through the pandemic was going to be for something that on the other end would be more hopeful and optimistic, and we would be okay. And suddenly one crisis, right, the pandemic crisis, has been replaced with another crisis, an inflation crisis, let alone the polycrises that we face of inflation, of climate change and geopolitical instability. And so you put all of these things together, and it's a very toxic brew about how people look at the public policy environment. And that's why, regardless of what we even see in Canada with the opposition party and Pierre Poilievre, it's the same dynamic that's actually playing out across a lot of countries, where incumbent governments are under threat because they are not seen as being sufficiently responsive to a much more angry populace who are frankly concerned that they don't see a hopeful future in front of them.
You mentioned off the top, and you touched on it again with this polycrisis, and I talk about this a fair bit in the last 2 chapters of Bullshift. There's a need to reconcile fiscal responsibility and economic growth with the climate crisis. And a lot of people talk about those things as being mutually exclusive. You can do one or the other. Can you perhaps share your thoughts on the extent to which they are mutually exclusive, or the extent to which they can be pursued simultaneously? And if they can be reconciled, how could that be?
So we are at a time in which we need more of everything, almost. We need more ways to deal with climate change and to decarbonize more quickly. We need more to build more homes. We need to reinvest and acquire more defense. We need more healthcare to address our demographic changes. We need more infrastructure in places like Indigenous communities that have been historically underserved in terms of access to education, water, healthcare, and other services. We need to invest in things like our supply chains and our value chains in order to address some of the frailties that we saw during COVID. We need more of all of those things. Well, what happened over the course of the last 25 years, I would argue, at least from a public sector perspective, is we tried to shrink the state, right? We cut taxes a fair bit, and then also cut the size of government, because we were making a bet that a smaller government that taxes less and does less is going to be better for productivity and investment over time. And while it definitely helped in terms of raising some incomes, we did not get anywhere near the kind of productivity payoff that we or other countries were expecting to come from all of those tax cuts and reductions in the size of government. And yet, by not doing things in that period of time for the list that I just mentioned of the things that we need now, we have built up a huge set of liabilities, right, that have grown and grown and grown to a point now, whether you talk about healthcare or whether you talk about housing or whether you talk about climate change, there is a massive need in order to invest in. And at some point, it's difficult, as you say, to reconcile how do we get the abundance of those goods if government is too small to be able to do those things. And what I think has played out, particularly in the course of this last budget, is an attempt to kind of say, well, actually, we need to rebuild some of the capacity of the state to do some of those things. The state can't deliver all of those things, but these are massive issues in and of themselves, individually, that we need to be addressing. And the private sector on its own probably can't do can't do on its own. So I think that there's a need for investment. I think the question that we should be asking ourselves is not the question about what is the size of the deficit. That's an important question, but probably the higher order question is, what is the state of how effectively we have responded to these different issues and needs in the way that we are handing off to future generations the capacity to solve those problems that they will inherit, and are we positioning our country in its capacity to respond to those problems better or worse over time for a future generation. And when you think about it that way, and you think about the fact that debt as a share of GDP is going to continue to go down, and yet climate change is, for example, just one of those issues going to still be there and grow over time as a problem, maybe we do need to think differently about the role of the state in addressing these things.
I'm wondering if you could just take one quick minute to talk about climate change. Do you think the Canadian public in general, and it's funny because in finance, we always tell people to take a long-term view. But one of the challenges in public policy is that a lot of people, when they're looking at policy choices, tend to make them based on the immediacy of what's right in front of them, and they don't really think about the long-term implications. Are Canadians getting any better at thinking about the long-term implications of climate change and what they might have, and what those implications might be on the long-term prognosis for their investment portfolio?
So I'm not sure about their investment portfolio, because I don't think that we've adequately integrated the risk that exists to financial assets associated with climate, different climate scenarios. Obviously, things like the superintendent, financial institutions, and the Bank of Canada have started down the path of working with financial institutions to start to look at the sensitivity of different asset classes to that. And let's remember, the initial results of that work has shown that Canada is even more exposed than other countries, right, to the downside risks of climate change, because we are a country that has large natural resource endowments. We also are a country that is heavily populated in areas that have been highly exposed to things like major climatic events. And so we kind of bear both sides of the risk. And until we start to actually price in those effects, right, in terms of how financial institutions are reporting and setting aside capital to respond to those things, or how asset managers are actually starting to make asset allocation decisions on that basis. And there's a whole other set of tools as to what that will require, including, for example, a taxonomy around how do you decipher what are positive investments that will help address the climate versus negative investments. Until we address those things, we're not properly pricing the risk. So I don't think that the individual investor understands that in a way that they should. And that's probably an area where public policy has been a bit deficient, and we need to do more. But to your broader question about how the public understands these things, I'd say a couple of things. One, despite what we've seen and heard about Axe the Tax and how popular that has become, Canadians still want serious ambition on climate change. Every bit of piece of public opinion research kind of shows that. The degree to which they prioritize that in the short term is a different matter, but they generally want governments to still be seen to be doing things on climate change in a significant way. Whether they make the link between that and the carbon tax is a different question, but they still want stuff, and they still want stuff at decarbonizing industrial emitters. They still want stuff in terms of building out zero emissions vehicle networks. They still want to be active in their own ways, as planting trees and retrofitting their homes, right? And building a clean economy of the future. But we're in an environment where people are price sensitive. But the thing I will say about climate change is that it's very easy to lose yourself in the long term, right? And it's very easy to think about targets, right? How do we reduce emissions to a certain level over time, and get lost in that long-term horizon? 2030 sounds like it's a long time away, let alone 2050, right, for net zero. And it's easy in that context to think either we have too much time on our hands and we can solve this problem later, so let's not act, or we don't think that anything that we're doing is going to at all be impactful. And the reality is we have to let go of this kind of infinity problem that we have with the long-term horizon. And we also have to realize that in the short term, we actually are making progress on addressing climate change. Our individual emissions are actually coming down and are down somewhere around 10 to 15% relative to what they would have been at this point in time compared to the pre-2015 baseline. So we're actually having a bit of success, and I know you don't want people to be super optimistic because there are reasons that we shouldn't have optimistic bias, but like we actually are starting to bend the curve ever so slightly on global emissions, and that in and of itself is a major shift that's happened in the last number of years.
I'm wondering if you can help me to figure something out that's been vexing me for a while right now, and that is that citizens are both investors and voters. And if you ask people how they feel wearing their voter hat, a lot of them are quite ornery. If you ask them how they feel wearing their investor hat, they feel pretty good about things. This is the same person. It seems to me that people should either be both or neither. They should be optimistic about both the direction of the country and the direction of their portfolio, or pessimistic about both. But there seems to be this disconnect, and I'm wondering if you can share your thoughts as to why that might be.
I'm not exactly sure why that is, but you're absolutely right that that phenomenon exists. And I'll give you an example almost in reverse of this. So if you were to look at the tax that's applied to financial institutions, right, that was instituted in 2022, but campaigned on in 2021. As we all know, Canadians are large holders of financial institution stocks, right? It's in every portfolio because of the structure of the Canadian index. It's in our pension funds, right? Like we have a huge exposure to financial services in the way that we individually as investors in Canada invest. And yet, if you were to poll on that particular tax, which is going to, effectively lower a little bit, not a huge amount, but lower a little bit the long-term profitability of those institutions, it is a massively popular tax. Why? Because people think of themselves in that context first as consumers, not as investors, right? They go into their bank, they don't like the customer experience necessarily. They think that the bank is perhaps gouging them on prices, and they think that the institution, has profits that are perhaps excessive. And whether or not that is actually true, in fact, is a different question. But my point is, often voters think of themselves more as consumers. That's the world in which they position themselves. And politicians who are thinking about platforms or budgets, when they put forward policy measures, are doing it largely on a retail basis because they want to capture very specific niche groups that are movable and identifiable, and think of themselves largely again as consumers who are up shopping around for policy ideas. And they shop around for policy ideas on the basis of what are their values, what are they angry about, and what are the problems that they want to solve.
And it would seem to me, based on what I just heard you say, that if something like inflation coming from 2.8 or 2.9, wherever it is now in April of 2024, down to the Bank of Canada's target of 2%, that would be accretive for both people's portfolios, but also for their mood. So there are ways where these things can be reconciled. Is that correct?
Yeah, I think that's right. Except remember that half of Canadians who own a home are on a mortgage, and so if they believe that the primary effect of inflation has been that we've had to put interest rates too high, and that's caused them, to pay thousands and thousands of dollars more on their mortgage, they're going to be most angry about that, regardless of what happens to their portfolio. Because I don't know about you, but I suspect most people don't check their portfolio on a regular basis, right? And so they're not as aware that markets overall have actually done it very well in the last year or two, even as the average household has struggled, right? And the disconnect, as you said, between those two things, voters pay a lot more attention to their biweekly check and to their monthly mortgage payment that comes out of their bank account than anything else.
I wanted to ask you about something that strikes me as being an apple pie part of the budget from Tuesday, and that is the money for food for kids.
Yeah.
It's the sort of thing that people think of it as being, probably money well spent. But I wonder if people actually think about how it might actually play out in terms of competitiveness and family welfare and mental health and those sorts of sort of ancillary benefits. Do you think people think about it in those terms, or do they just say this strikes me as being an okay idea, so whatever, and that's that?
They don't think about the economic competitiveness argument in the same way that on childcare, they don't see it as an economic competitiveness issue either. They see it largely as an affordability issue. And both are valuable and both should be done for economic growth reasons, but they will be positioned and sold as either affordability or values issues because that's how most people understand them, right? And all of the literature, because Canada is the only country that doesn't have a G7 country that doesn't have a national school food program. When we look at other countries that do, all of the literature shows us that those investments in school food nutrition programs reduce costs for families materially. Like in the United States, it can be almost $200 per kid per month that it reduces the household budget by for groceries. That's massive in an affordability crisis. But at the same time, we also see that it boosts labor supply of mothers because it's an affordability issue. And frankly, it's also a time issue, right? It frees up a bunch of time within the household operation that can be devoted to other things like work and has some incremental effects in inducing labor supply. And also means, because kids if they are better fed and more nutritiously fed, they'll be better learners. And when they're better learners, they will go on, and there's a lot of research on this in Europe, they will go on to earn more over time. And I think if I'm looking at where Canada is deficient on things like how we address productivity, there's a bunch of ways to do that. But the one that I'm most interested in is the fact that as educated as we are as a country, we still lag the United States in particular and other advanced economies in the number of people that we have in advanced degree occupations. For example, just compared to the US, I think if you took a similar percentage of people who are in master's or higher education, we should have somewhere in the range of about almost 700,000 more people that should be in those occupations. And that 700,000 people tend to earn on average about $10,000 more per person, right? So you just run the math of how simple investments in access to education and simple investments in helping people learn better have a real positive payoff over time, but they're not understood by the public as those, and they're not sold by politicians as those, because the things that matter to voters right now, again, are very consumer oriented. They're, what does this do for my pocketbook? How does this help me in the immediate sense of opening up my time and money?
You know, I could probably go on for another half hour, but we're running short on time, so we have to. And I feel so bad about it because I have so many more questions I want to ask, but I think we have to respect your time, and you've been very kind with it. So let's see if we can get to the end. I always like to end with two things. The first is that's bullshit, and that's where I ask you. You're a public policy guy. If there's one thing in the finance industry that sort of sticks in your craw, what would that be?
Can I give you two? Am I permitted to?
Sure, right. Yeah.
Well, I'll give one for financial sector, and then I'll give one for how government thinks about fiscal policy, because the two are somewhat related. Right. So on the financial sector, like we've talked a lot in Canada about the need for productivity growth. We hear bank economists, bank CEOs talk about this a lot. One of the levers that we as a country have not pulled, we've pulled a lot of different levers to try to solve this problem. And yet, you know, we're a little concerned. Why is it that productivity is not improving? The financial services in Canada are a significant input to our economy, right? Just because of how large they are. We have not thought about competition, perhaps, in that space, and the way in which competition, choice, and price can actually help in addressing productivity. Now, I'm not suggesting that we should open up the spigots on competition necessarily in revising who can own a bank or anything like that. But I do think that it is valuable to think about things like how you are able to access competing products in, say, the wealth services channel, and the way in which when you go into a bank, what are the things that you're going to be offered? Are you getting the full degree of choice? You know, we've seen some of these consumer protection measures that have had to be created in the last number of years, because I think there are some concerns about how well Canadians are actually doing in the way in which they engage in financial services. And, you know, Canada's benefited from that comfortable kind of arrangement where our financial institutions are quite big and stable. And don't get me wrong, we've done very well by that. But at the end of the day, there's a potential competitiveness issue there, and I think it's worth exploring more. The second thing, very quickly, is on the way governments make budgets and how they invest. We need to change, to your point earlier about how to solve some of these long-term problems. We need to change the way we allocate government capital, because the fiscal framework is all about what is the cost of something, right? What is the price and the way in which that price plays out in the fiscal framework, adding or subtracting to the deficit. We are not allowed in any way in our fiscal framework to look at the investment return that would have, be it in terms of raising GDP, raising productivity, right? Which we know are important things that make the case for things like school food programs, childcare, et cetera. But there's nothing in the way that we report on an accounting basis any of those returns the way that a business, if it were presenting its financial statements to investors, would be able to say, we're making this CapEx investment and it should have this return that accretes in some way to our long-term profitability, and trust us about how we execute this plan. We can't do that in the public sector. We need to change that potentially, because that in and of itself is how we unlock a change in mindset about dealing with things like climate change.
It's funny you should mention those two things, because Amanda Lang, about 2 months ago, I had her on, and she was talking very explicitly about competitiveness and competition in Canada as being her beef. And then about a month ago, I had Peter Victor, who is a prof at York and one of the leading environmental economists in Canada. And he was the one who was talking about the full cost accounting of all these other things that you touched on earlier in terms of quality of life and things that are difficult to measure, but that are nonetheless real and desirable. Okay, so those are your two that's bullshit beefs. If it was up to you, Tyler, what would you do to solve the problem? Shift happens. If it was up to you, how would you make things change to deal with the problems we've identified a moment ago?
So on the first problem, I think it's really interesting because the federal government is, if we think about financial services, it has one piece of the pie, but there's another part of the piece of the pie at the provincial level. And we often don't want to talk about these things as an integrated, intergovernmental file, because the federal government really guards its own responsibility over things like the Bank Act itself. I actually think we need to get both sides of the table together to start to say, how do we better protect consumers? If I were to look for something over the next year, I'd be saying, how do we get the two finance ministers talking about this issue? Because they both care about productivity. They both care about competition. They both regulate different parts of the problem, but they're not looking at how they can solve that problem inside their own house, inside the financial services sector. So how do we get the provincial and the federal finance ministers talking about this? On the second problem, we need to actually develop a new accounting framework for how we do public sector accounting in Canada. And don't get me wrong, there's some risk here, because if you go too far around how you define investment, you can probably open up a bunch of activities that we probably don't want to do, or necessarily to enable some pretty specious claims about what is investment. We have to be tight about that, but I think it is well past the time for us to be asking this question: what are the secondary effects of the way in which we spend, and how do those play into the fiscal framework? And a great example of this is what happened with the Trans Mountain Pipeline, right? The government of Canada made a decision to buy an asset, which is the Trans Mountain Pipeline. It's cost a lot of money to build, but it is about to be turned on. And you see in the budget document tabled earlier this week that when they turn that pipeline on, it will have a big effect on nominal GDP. It will have a big effect on helping Canada find higher value export markets for our crude. We need to incentivize doing those kinds of things. But in the fiscal framework, we have no way to do that today, because a government has to take a leap of faith that the cost that they will take on today will be paid back at a later point in time, which may be a point in time when that government is no longer in power and someone else will accrue the benefit. You have to match the costs and the benefits better together over time.
It's funny, because one of the things that I like to point out, is that if you're an ordinary person and a government launches a budget, comes out with a budget, they'll say they're spending. But if you listen to the press release, the government will say, we're investing in the future. We're investing in these things. And it's funny, it's the same thing, but the lingo is quite different depending on who's doing the talking. So it's interesting. We have to wrap it up there. Tyler, it's been a pleasure. I really enjoy your work. I follow you very actively on Twitter, and I think your comments are brilliant. Thank you so much for joining me today, and I want to wish you all the best in the future.
Thanks for having me. Really appreciate it, John.
John DeGooey is a portfolio manager in Toronto and the author of the book Bullshift: How Optimism Bias Threatens Your Finances. Bullshift is available online and in bookstores everywhere. The opinions expressed in this podcast should not be construed as investment advice. Bullshift, the podcast, is produced by TalkShoe, a division of IOTM.